So this is a panel that's kind of near and dear to my heart as a person who's runs a fintech incubator program. Has been kind of tangentially around venture capital and angel investment for the last 10 years. So excited for the opportunity to moderate this panel. So if you guys don't already know, Brett Noyes, Unbanked Ventures, located in Silicon Valley, work with really early stage fintech companies, and we'll be rolling out a blockchain and AI focused program this fall. With that said, let's introduce the panel. We'll start in here with Marshall.
This on? All right. Marshall with CrayPay, mobile payment app that's developing cryptocurrency that'll be usable at 55,000 retailer locations in the U.S.
Xiaojun Zhang, president of FinTech for Good, and we are a blockchain incubator, accelerator, investor, and we identify the best blockchain fintech companies. Through our program, we bring them to different countries, and as of now that we have around 7 locations and covering most continents, and so we are also launching our next acceleration program in early August, and we are going to select 30 companies globally, and 15 will be incubated in the US, 15 will be in China, and welcome to just either be an applicant or be our partner to support our startups. Thank you.
Hi everyone, my name is Alex Gostomelsky. I have been in blockchain for 2 years. I launched my first fund earlier this year that I exited this past summer, launching a new fund called Switchboard Capital. We are a quant-driven, algo-driven fund, trading based on different price prediction models that we've built in-house. And the new fund's really focused on helping founders that have done token sales diversify their holdings and make sure that they're managing their new capital properly, and as well as syndicating deals so they can invest back into the community. And I'm a GW alum, so it's good to be back here. Thank you.
Hello, I'm Reggie Middleton. I'm an old school fundamental analysis investor, the global macro. I got my claim to fame about exactly 10 years ago, called predicting the fall of Bear Stearns, Lehman Brothers, commercial real estate, European sovereign debt crisis, etc. I've took my analytical team, about 5 strong, and we do solely digital assets now. I guess I'm old school in this realm, starting in 2013, to show how new the industry is. And we have the company is Veritasium. We have a slew of products. We have a smart contract-driven application that basically replicates a venture capital or private equity fund, solely peer-to-peer on the blockchain. We do fundamental forensic and global macro analysis on digital assets, not only ICOs and platforms, but real-world assets that have been tokenized, such as a cash flowing building on the GW campus, et cetera. And we also do investment. I take my own capital and I put it at risk. Again, solely from a fundamental analysis, forensic analysis, and global macro perspective. And I'm willing to fund anything that I feel has the requisite risk-adjusted reward.
Excellent. Okay, let's start down with you, Reggie. So what drew you into the blockchain space, and what's the opportunity that you see that, because it seems that when people get into this blockchain thing, they kind of go full hog, right? So it seems like, tell me about your experience getting into the space and why. Okay, well, I had, initially I was right before the market corrected in 2007-06. I was a real estate investor. So I was always from the outside looking in. It was quite obvious in 40-foot red letters, this is going to blow up momentarily. And I was going to start a hedge fund, and the hedge fund didn't take off because hedge funds weren't doing well. So I just sold my analysis, and I basically speculated on collapsing fire companies, finance, real estate, et cetera. In 2010, one of my customers asked me, analysis customers asked me to look into Bitcoin. I ignored him. He did the same thing in 2011. I ignored him. Now remember, Bitcoin was about cost basis of 30, 40 cents at the time, if that much. In 2012, asked again. I finally got around in 2013. But being in the media a lot, I ignored primary media and I went straight to the white paper and the Bitcoin wiki. I read about smart contracts and how the blockchain worked. My jaw hit the ground. I did
due diligence for about 2 or 3 months because it seemed like it was too good to be true. It wasn't, and I jumped full in. I quit the blog, I quit the advisory business, I quit my proprietary investments, and built up a engineering staff and started creating applications that allowed the use of smart contracts. That was 2013, and here I am today doing the same.
So I always think it's interesting when someone says they read the Bitcoin or the Ethereum white paper and they just like got it, or like they're so excited about it, because I've read both of them and I guess it didn't click with me as well as some other people, right? Like, maybe that's why I'm moderating and I'm not on the other side of the panel. But so, Alex, how did you get into this space?
I had a similar story in the beginning. Actually, when I was still at school here, my roommate like burst into our apartment one day and he's like, "You guys, there's this new thing. It's called Bitcoin. It's like money on the internet." And we were all like, "F off, you're an idiot. Like that's the dumbest thing we ever heard of." And then several years went by and I started seeing this thing really pick up. And then I actually read the Ethereum white paper and I was like, okay, I get it. The tech behind it's so much more interesting than the investing that we all do right now. The investment in the space has outpaced the technology by 5-10 years probably. So the real use cases are just being built. Like we're just seeing the first products being shipped. So that's really what's going to be interesting in the next few years.
Yeah, and I started to looking into Bitcoin when I was completing my PhD, and I was looking at Bitcoin's P2P because my dissertation was technology to empower crowds. So then this is one of them, but I never thought that I will just work on it. And then when I was at World Bank, we are looking at a different new technology which can just provide financial service or to address access to finance problem faced by SMEs. And then, blockchain, and also to just reduce cost for the reporting and the tracking and all the SDG related issue. And then at that time that I revisited blockchain as a potential solution for the sustainable development goal related problems. And then when I decided to just leave World Bank and either I start becoming a startup or become an enabler, and because in my whole career, and I was really taking the role as enabler, no matter from the research side, from the funding side. So then I decided, okay, that just take the similar role and then to just sit here to look at all the blockchain company, fintech companies, and see that's how my expertise and my network can just help them to grow to the next level.
Excellent. Yeah, the world needs enablers. I don't know if that's the correct term that we like to, how we think about, the venture side, but it's definitely helping companies grow and scale, through the deployment of capital. So Marshall, you come from a different side, so we wanted to balance this out with, you never see an investor panel that's got an entrepreneur on it, so we wanted to kind of balance it out and see, because you come from the other side of the receiving side of this. So let's start with the first question. What brought you into the blockchain space?
So CrayPay was developed as a solution to payment problems that we couldn't find on the marketplace. While servicing merchants for the last 18 years, we were trying to solve some problems, and there wasn't a solution set, even with all the advanced technology and all the investments been made the last couple of years in payments. We couldn't find anything, so we developed it ourselves. Similarly, when blockchain became more popular, we started to see some potential there, but the solutions to bring blockchain technology to retailers, especially large-scale national Fortune 500 companies, was not on the marketplace. And so we decided to explore how we could actually develop that in-house, and that's what we've done with CrayPay.
Okay, excellent. Okay, well, before I get into my more serious questions, so how crazy did all your friends and family think you were when you guys jumped into this space? And are you still trying to explain this to your family at Thanksgiving? Start with you, Marshall.
I think my mom was more interested in just watching some of my interviews than actually understanding, but through enough of them, she started to pick up on it a little bit better. But I think you use the past tense on whether they thought I was crazy. I think it's probably more current tense.
Okay, yeah, so we're still there.
Yeah, my parents gave up to just try to understand what I do a long time ago, because I took a major in Germany called global studies. So then nobody know what that was. Then I started to first doing research. I was validating CDM projects. Then then my parents told people that I was selling air. And so now I changed to just the blockchain and the Bitcoin and all that. Then that's okay, whatever you are doing. But they see me on TV or news network, and they say, we are happy whatever you're doing.
Well, someone else thinks it's good. So with my father-in-law and my father, they're always like, "Oh, you're into this Bitcoin thing," and I'm like, "I don't at all touch Bitcoin, but but that's something and understand, and we could build on that." So. How
I've
about you,
always
Al?
been the crazy one in my family, so it's nothing new.
it's fitting, right?
Yeah, it's like Thanksgiving's fun, and we watch the price go up, and then we watch it go down, and then I'm wrong.
Then they're like, "I told you this is a scam, right?" How about you, Reggie?
Everybody always thought I was crazy, which is interesting because I started doing smart contracts and peer-to-peer transactions in 2013, 2014. Nobody really got it. Now, Bitcoin is in the mainstream. Okay, but it's in the mainstream. Most of it is either speculation, right, or big entities such as financial companies attempting to streamline their back end. Our perspective, I'm both an investor and an entrepreneur. Our perspective, our business model is to totally disintermediate the large banks, right? Literally take them out of the equation and using public networks, never private networks. We've seen this story before. Those of you who are close to my age, when the internet came out, the big product initially was an intranet, where you built your little mini intranet behind a firewall, and they charged a lot of money for that, the vendors and consultants. Fast forward a few years, it was a waste because everybody, after building a $800,000 intranet, had to go to the internet. So I told the story, which I see clearly and plainly, but everybody thinks I'm out of my mind, from the big bankers to the consultants to almost everybody else. So give it a year and a half, and they'll be like, oh, I get it.
I have one more, interesting story. That was, during the Christmas time, we hosted a party here in DC area, and a lot of my friends and also my partner's family all there. And then because they know that I'm doing this, and so then the whole New Year party was just I teach everybody to install a wallet, and then right after that, and the price dropped a lot, and everyone at that time asked me which one to invest. I always tell people that I'm not doing investment advice, so I was very lucky that I helped them to install the wallet, but I didn't really advise on any of them. So yeah.
My experience is about almost 4 years ago. I worked for Tim Draper, who was very one of the first and one of the larger investors in the space, and I would host the Bitcoin meetup, and I'd always say it's the most interesting group of anarchists I've ever worked with. And I really was not, and still to this day, not all in on Bitcoin, but the Ethereum, like some of the companies we were working with there, I didn't understand the opportunity, but what I saw was from the technology side when they say we can, take a trade. Settlement from 3 days down to 15 seconds. I'm like, I don't know what that is, but that's awesome, right? Like from an investor standpoint, that's leaps and bounds in technology evolution. And the other aspect of working with Tim is he always seems like an idiot, or like he's an idiot and then he's a genius, and it goes back and forth. So he was predicting back then that Bitcoin would go to 10 grand, and it was like dropping, and it was just like, okay, he's past his prime, he had this early success, he's an idiot, and then it hits 10 grand this year, and then he's a genius again, and then, so it's like, I think it's always in this space, you're like an idiot, you're either a moron or a genius, and there's really no middle ground, right? So
yeah, the key, if anyone ever asks you for investment advice in crypto, before you say anything, ask them if they're ready to lose all their money. And as long as they say yes, agree with anything they say.
That's some solid advice. So let's talk about ICO, starting with Reggie. How has this changed your business? Is this an opportunity or a threat to what you're doing? So you're saying you're coming from a more conventional VC background. What does that look like in your world? Are you doing equity investments? Are you doing token investments? Are you just no longer relevant? I mean, where do you stand here?
Actually, I come from a conventional global macro background. So global macro is not really conventional. Global macro is back with macroeconomic bets. Anything, any asset, any place in the world at any time, I will go long or short on. So basically, my mandate is to make money. Outside of that, legally. Okay, outside of that, it doesn't really matter how. I've been doing that for a while with my own capital mostly. I am a perfect example of how the ICO, I think, should work. I could not get a venture capitalist to fund my ideas for 4 years straight, 3 years straight. So I did an ICO, but I did it as a global macro and a fundamental investor would want to do, where I took the tokens and I made a strong accounting argument of what the tokens are. It has nothing to do with investments, okay? And I consider the tokens to be more valuable than any currency-like instrument that would be used to pay for them. So I only sold a small amount that were prepaid fees for our products and services. I think it was one of the most successful ICOs in the industry, and it enabled me to accelerate the product development. Now, I've created smart contracts that replicate venture capital fund performance, but are still just software and contracts. They perform better than the market by far, and they've outperformed many venture capital groups, and we're just getting started. What funds this software is old school manpower. I have 5 analysts, and all they do day in and day out is analyze digital assets, ICOs, platforms, how it's linked together. We have a valuation framework that counts profits, revenues, margins, prospective markets, et cetera. These are metrics that you almost never see in the industry. And the reason is because the industry is immature. It's lacking diversity. Most ICOs are a bunch of software programmers and engineers who get access to capital and start building software. That's not a business. A business is diverse. You have finance guys, you have management guys, marketing guys, and usually the minority happens to be the tech part, even in the tech business. If you look at Microsoft or Intel, most of it is management, marketing, et cetera. The minority, not vast minority, happens to be the tech guys. So coming from an entrepreneurial background, that's how I built the business. And I think we're off to a strong start. You know, we have patent applications in multiple jurisdictions. The earliest priority date I feel in the industry. Not my fault though. It's working with smart people. That's how I can't take credit for it. We have traction. We have several products ready to go. And our ICO was 1 year, 2 months ago. We have 3 products mature, ready to go out the window, and the 4th that we're launching next week. And the reason why we're able to do this is diversity, okay, never just all of one thing, and hunger, okay. We are now looking for other ICOs who do the same. Now, many ICOs are considered scams, and I agree with it, but in my opinion, many IPOs are considered scams as well, so.
We'll come back to the scam part, but Alex, tell us. I mean, so you're coming from a different, almost like a hedge fund type of perspective. Yeah. So what do ICOs mean to you? You know, is this an opportunity, threat? You know, talk maybe
definitely
liquidity.
An opportunity. So my fund, we let the data dictate our trading. So we're investing in the liquid cryptocurrencies, the top 20, top 50 by market cap. But I'm a startup guy. I've been in venture for a few years, and as are my partners. So, you know, we're always analyzing new ICOs and token sales that are coming out on the market. And, you know, that's kind of what's dictating the industry right now. You know, ICOs are the most disruptive force in capital raising ever, probably, if you look at last year. So, you know, you have to pay attention to it. There's some deals that we really believe in and will invest in kind of outside of the fund. But, you know, that's where the industry is being built right now. And so what we want to do really is support what, you know, the building of the infrastructure around it. And we've seen kind of like a downtick in the capital being raised this year, but actually an uptick in how many total ICOs there have been. So, you know, I don't think that trend is going away, but regulation's coming, so we'll see.
So what is that? I mean, what does that mean? So is it good, bad? What does it mean that?
The uptick?
I mean, there's. It seems like there's a ton of kind of. What are the follow-up questions?
I think it's good because you're seeing, you know, more sophisticated companies doing ICOs. So last year, you know, people, you know, look at, you know, a company like Tron, right? They raised like $100 million off a white paper that was forged or plagiarized. But now you have, you know, companies like CrayPay that are launching with built products with built-in customer base.
I think that's an interesting perspective because I think it's to me seems like there's just more kind of people are sitting on the sideline that saw all these people raise ridiculous amounts of money saying, I want a piece of that, I'm going to add blockchain. So I'm happy to hear that you think that it's kind of more maturing and we're seeing actually better companies. So I think it really kind of depends on what you're.
Well, I think like every average consumer that's ever invested in crypto or an ICO has been forced to be more like a VC. Like, you know, the behavior of last year isn't allowed anymore. You're going to lose your pants. So like you have to do more like fundamental VC analysis on any crypto that you're looking to buy. You're looking at the team, the product, the timeline, the progress, the customers that they brought on board, the partnerships, and you know that's what's really important going forward.
Okay, so yeah, one last question for you while we've got you talking on this. So I mean, fundamentally, it seems like with what you're doing, it's like you're talking about a little, like you have to think like a venture capitalist, but there's almost elements of like the public market that are now immersed. Agree, disagree? Like, because you're,
I mean,
they're almost like publicly traded companies
yeah,
that
I
are
mean, it's
pre-product.
like, yeah.
So you're looking at them from the VC idea of like, what could
Right.
this team build? But now there's like somewhat of a, if they're traded on a platform, there's liquidity. Now you got aspects of public market type stuff. So
Yeah,
good.
I mean, like the idealistic view of this industry that we live in is that it's going to mirror kind of the equities market, right? Like you're not going to go and buy a stock if you don't believe in that company or in the product or on the trajectory that they're on. So, you know, that's kind of like where crypto's hopefully reverting to that sort of mean, where, you know, the companies now have to back up the money that they raised and the promises that they made to people. And so, you know, companies and founders are being held accountable now, not as much
Now,
last year.
yes.
And so, you know, that's where we're moving, but, you know, we'll see kind of how the ecosystem evolves because I think there's 1,600 plus cryptocurrencies right now. Like, do we need that many? Do we need more?
Seems like there'll be some
so like there's going to
consolidation.
be so much involvement
Some
and
depth.
we just kind of, each one of us has to really keep to really like, building your knowledge base every single day and making sure that you're kind of following the market, understanding what's going on.
So how about you, Sao Chen? Like how are you looking at this from an incubator, accelerator, kind of early stage investor side?
Yeah, and I look at ICO always have this love and hate mixed feeling. And when I organize any ICO panel, and I always just have the title "Good, Bad, Evil."
Yep.
And the reason is, you know, when you just look at no matter early stage and the later stage investment cannot meet the demand. That is the pure fact. And then, you know, we first have crowdfunding as the early stage, you know, investment type of innovation. But then we also see the, you know, challenge that crowdfunding as a potential fundraising vehicle, but has a lot of challenge. When I was at World Bank, that we want to just use crowdfunding in African country to bring capital from Europe, from you know, the developed country there. The exchange rate and everything, all the costs accumulated, finally just make it impossible. So then a good investment vehicle without crypto, and it doesn't work. It doesn't make business sense. So with the crypto actually as an ICO, that does add that value to make the early stage crowdfunding much better. So that's why I started to promoting ICO as a fundraising vehicle within the angel community with the early stage seed round. And then now when we just look at also the later stage, and before that, you know, as of you know, the interesting thing that he mentioned that I you know, started my own first fund within 2 years I exit. This in the investment space doesn't happen before.
Yeah,
and
that's kinda crazy.
You have a fund.
That's a paradigm
10
shift, right?
years, then
Yes,
you
exactly.
exit. Now that's at even later stage, you have liquidity. So a lot of time that's in the, you know, PE side, that later stage side, that you invest in something that you hold it for a long, long time, and then to leverage capital market, you don't have liquidity.
The
then you don't
liquidity
have
piece is
capital.
very interesting from an early stage investor standpoint.
Yes, and so then from the, you know, innovation side, definitely I see ICO as a tool which is essential. Is as what he said, that, you know, for me the same. The most innovative thing which is happening in the capital raising space. But definitely, it just create a lot of problem for the fundraising for the entrepreneur community. Just to give you a few examples, that's just now that I discussed with some project who are looking for fund, and the first question I asked, are you an ICO CTO or are you a CTO? Because before this is not a question. Because now
So now you're categorizing, like, help me understand that. Whether you're an ICO CEO or just a straight up
because
CEO.
a lot of now startup assemble a team just for ICO. After ICO, they got money, the team just disassembled. So
Okay.
for investors, it's really a high risk that you have to just look into this team and whether it's real or it's just for the ICO. The second part is that a lot of them just if you are early stage, then you just raise the seed round. If you are later stage, A round, B round, you know how much money you raise and you know what you are going to do with it. But now a lot of seed round or even pre-seed round of project, the readiness is not there. Then suddenly that they just have the D round of capital in their hand. They don't have the expertise, then they don't know what to spend. Finally, with this amount of money, the team actually, before if you have a seed round type money, the team will just work together, say that whatever problem we have, we figured out because we cannot. There's no liquidity.
Yeah.
But now with the D round of money, if it doesn't work, use the money, I hire better ones. So the
Is that a good or
team
bad?
is really the worst.
Okay, that's what I
'Cause,
figured.
Yeah, we want the
So it-
team to work together. from
Let me
the beginning.
decouple that a little bit, but so to some extent, companies are, before you go raise, right? You work hard, you get an MVP, you bring product to market, you get someone to write you or collectively $250,000 to $500,000. What we've seen in the last year is people go straight to like kind of the ICO crowd source money and raising anywhere from 10 to 100 million, which generally speaking, $100 million, you might be at, like you say, a D round, right? So it's kind of like, as a friend of mine says, it's like the steroid era of fundraising. So fundamentally, it's hard to think that this is good. That team, like you're saying, the team structure falls apart. That you don't maybe build the fundamental foundations of a good business. That doesn't mean to say that some people on this panel might not make money on the hedge up or down, but so it's changing. So
that's
Reggie,
why,
then I'll-
that's why we just we are seeing a lot of new innovation in this space. For example, using smart contract to just release fund based on milestones, and there are different type of arrangement. So you still if you're an excellent project, you still can just have that potential. But without meet your milestone, you
Yep.
cannot release it.
Yes,
so then
that
the
makes a lot of
team
sense.
have to still just work together to meet that goal.
I think the discipline of building a business still exists, regardless of how much money you can freely raise now. So, Reggie, you had a comment, then I want to make sure we give Marshall some time to kind of have the counter argument.
Yeah, I
on
was
this.
actually going to build on that. So there are three issues. There's one question that I've asked every single token startup. Nobody has answered the question, and it's basic, and it's a question that everybody should answer. When they come to me, and they come to me as an investor, and they want money, I say, how much money am I going to make? When? What's the risk? Huh? Out of, I'd say, about 50 companies over the last month and a half, not a single person or group asking for investment capital has been able to answer that question, which is ridiculous. You can't go and ask somebody for money and not tell them how much you're going to give them. The second question for investors, no investors ever asked, well, how much money I'm going to make, over what period, and how much risk. In every investment ICO group, I've never heard the investors ask that. And the third, which when I was in Silicon Valley, which was a bastion of technology, intellectual capital, there are quite a few startups that created smart contracts that parceled out capital over time. The problem is you cannot create a technological solution to a human problem. You need to invest in a strong team. So if you don't trust that team with the capital, first of all, you shouldn't be giving them the capital. It's just that simple.
I think the fundamentals still exist, right?
Right.
Team, product market fit. I think a lot of that just kind of went out the door last year.
Yeah.
Hopefully, it seems like it's coming full circle. Okay, back to you, Marshall. So you're coming from the different side of the perspective. So you see that eventually someone's gonna you raise an ICO. So tell us, I guess maybe tell us more about your story, why you plan on doing that, and tell us both the good and the bad side of doing that.
Yeah, so I have a lot of thoughts about everything that's been said, so just kind of listening patiently to all the perspectives. So first of all, Alex, thanks for the shout out. That was great. And Reggie, are you going to hold me accountable if I give you an answer to that question?
Please, I would definitely.
If I give you an answer and it's not right, are you going to hold me
There
accountable?
is no not right answer. It's just an answer.
Yeah.
All right.
At least
We'll
you-
talk, we'll
at
talk
lea-
later.
at
I'll
lea-
give you an answer for the first time.
At least you thought it through. I think
There
it's
you
really
go.
the point of that question.
Yeah, I think so. There's a lot of talk about accountability, due diligence, regulation. Those tie together really closely, and I think that back to what Alex was observing in the number of ICOs increasing and the amount they're raising decreasing. I think that's a positive trend, as I think everyone up here probably agrees. The challenge that we have, I think, in ICOs is there's currently not a good mechanism for a follow-on. So you were talking about a seed D or round D. What is your round D if you did an ICO 10 years ago? How do you raise capital a second, third, fourth, fifth, sixth time? So the fact that we're seeing $100 million raises can look from the outside to be exorbitant, a large amount of money. But if you were to look at other companies that have had successful tech ventures, how much did they raise over the last 10 years, right? How much did Facebook raise in their first round compared to their fourth, fifth, sixth round? So the ICO, I think, has given us a very interesting solution to a problem. And I think really what it hits on is the better liquidity for investors, which you guys have hit on as well, right? You don't have to wait for me as a founder to sell my company. You can sell your tokens when you see the opportunity, as long as you're complying with regulatory frameworks.
So what does that mean for a company, though, if let's say your investors start dumping their coins, right? Like the things I've kind of fundamentally tried to understand is what does that mean for an early stage company? Does it really affect the day-to-day operations?
That's a good question. So it can, depending on how your ecosystem is set up and how your economics tie between the company and your secondary market. Within certain organizations, there is a deep tie between the two. CrayPay is existing entity with revenues and customers and merchants as well. And so we are affected by what happens on the secondary market by our token. However, it doesn't affect our users directly. So we've insulated them from impact of the coin going up and down in value directly. But I think more importantly, you can give tools to your investors to avoid having a drastic impact on the market, such as connecting with an OTC desk. As long as there's liquidity for your token, you should be able to match your investor who wants to sell a bunch of tokens to a buyer who wants to buy them and do it outside of the exchanges so that you're not impacting the price. So there's some tools being developed, I think, right now, and there's some already on the market that'll help solve that problem. There's lockup periods, there's incentives for longer lockups. If you're raising in the US under certain regulatory exemptions, obviously you have Rule 144 to consider to begin with, which means that your early stage investors are gonna have to hold their token investments for 1 year from the date of their initial agreement. So the earliest companies we saw going through ICOs, a lot of them didn't comply with that. And so there were a lot of pump and dumps going on where the early stage investors pumped it up, bought it, chilled it, and then sold as soon as it hit the public market. And that was detrimental to their entire community, company, founders, investors, everybody.
Okay, complicated subjects here. Okay, we've eaten through our time pretty well here, but I want to ask one last question, and then I want to make sure we give a little bit of time for questions from the audience. So Reggie, you kind of already given, what's the advice you give to entrepreneurs? I think we've kind of, in addition to what you just said, as far as being able to answer those questions, is there any other advice you would give entrepreneurs that are thinking about entering let's say the blockchain space, or doing an ICO, or even approaching you? What is the advice that you would give them?
So for entrepreneurs, you have to have a value proposition, okay? Without a value proposition, that's why you can't answer the question of how much money you're gonna make. The reason you can't answer is you don't know. A value proposition is based in a business model, okay? You need to know how you're gonna bring money in, how much money that you're gonna keep, and when and how will competitors come and eat your margins, because they always will try. The only reason they won't try is because you weren't making money in the first place. Because we're using these fancy terms of blockchain, DLT, tokens, etc., people think that we're operating a new game. It's the same game that's been going on for the last 10,000 years when the first caveman sold a rock, okay? Fundamental analysis, money. I buy something.
I think that's a great point, right?
Yeah,
I think that's what we kind of got lost in,
yeah,
right?
And everybody, they think, math doesn't apply. Once you have a business model, you create a value proposition, then you create an investment thesis, and you sell somebody on it. If you have a good business, you shouldn't have to worry about liquidity for the tokens. The token price goes down, people learn how to value it, and then they will buy it and the token price goes up. Right now, you have volatility in tokens because A, very few real investors are in the market, so they don't know how to value tokens, and B, the tokens were structured improperly. And that's the second biggest advice tip I could give you. Structure the tokens with the value proposition. So economic value flows from the company into whoever owns the token, whether you have a security token or even a utility token. A utility token is very valuable if you need it, and it's not an investment at all. But you have to outline and create a value proposition. Anybody wants to know how to do it, contact me afterwards.
Excellent. So, Alex, I know you come from a different perspective, but I mean,
not really. I was an entrepreneur before I was
okay, sure.
in the fun
I
world.
could have spun this question a
And
little different
so-
for you, but
yeah, I mean, so my advice ties to Reggie's. Like, I give entrepreneurs, whether they're in crypto or not in crypto, the same advice. Do as much as you can for free before you have to raise money, because whether you're raising an equity round or you're going to do an ICO, the more that you've built and the more you've proven out your model, the more success you're going to have. So if you're raising equity, you're going to get better terms and probably a bigger raise. And if you're doing an ICO, you're probably going to get a bigger raise and you're going to do it faster, as long as you have good fundamentals behind what you're doing and you're presenting your value prop. So
value proposition, fundamentals.
yeah, I mean,
we're up here like saying, eat your vitamins.
Yeah. There's a reason.
Exercise is still good for you.
Yeah, there's a reason. There's 10,000 books written about the lean startup method. Like, it works and it's smart and it's the best way to build your business. That being said, you have to do some sort of math on like how long it's going to take you to build and doing some cost benefit analysis in there. But scale as fast as you can. Make sure that you have a business that's sustainable and don't raise money irresponsibly.
There you go. Sachin?
Yeah, and for me, that's for startup, and probably one suggestion I can give is that you rank these three words differently. And for me, for a blockchain company, that's people is first, community second, and then capital is third. The reason I said that is as a blockchain company which are using ICO, you need to have people who understand tokenomics. You need to have people who understand all the legal compliance related issues. You need to people who help you to do your tax planning, and you also need to just do the cross-border related. Then you have the right people to build the industry business offer together with the token offer, and so you have and also you are going to manage a large amount of money. You need to have right type of CFO and all that. So this actually just gave the early stage kind of company a new challenge. You have to have a right team first before you can launch an ICO. And when you just look at all the ICO or the blockchain company, that's a distributed network need community. So if you just tell me or other investors say that because I issue the token, so then everyone will use my token, this will not happen. So you have to have a right strategy to see how I'm going to build my community from this number to that number with this period of time. What will be an incentive I provide to my community and how I reach it. Everything has to be very clear. Then the third part is really the capital. And lastly, I want to just call out my awesome team, because we are organizing this dinner event today.
Also, thank you very much to your team. They've been amazing in helping us put on this event. So
sure, can you stand up? And
Jessica especially.
Yeah, and so today from 6 to 8 that we organize a dinner at Hive Hotel, and with a small group of experts in the DC area, and we'll welcome some of you who can join us. And if you are interested, contact Jessica. And also, I repeat again that our call for application of our next acceleration program will be out soon, and join us no matter as partner or as a startup.
Perfect. Okay, Marshall,
I don't remember the question.
Yeah. So you're coming.
I don't have a dinner I'm hosting tonight. Sorry, guys.
Maybe one you're coming to. Okay. Well, anyways, coming from a different perspective. So, but I mean, from your experience, like, what's the advice you give to an entrepreneur, right? So these guys can talk about what entrepreneurs should do, but I mean, and some of them have been or are entrepreneurs
I
actually.
think
But
even though we're on different sides when we're
Sort
actually
of.
negotiating,
We're all kind of
sort of
straddling that
I
line.
think we all kind of have a consensus on what's happened in the past. I think one of the things that I do hear though is a lot of reactive to what has worked in ICOs, and I would challenge these investors to think about also what should be happening with ICOs in the future. So even comments about team and community being so important, that's true, but I didn't hear any talk about an existing product, and only 9% of ICOs last year had an existing product. And I think as an early stage investor myself, I look at the actual product and where they are in that roadmap, and I think that can take a bigger focus off of some of those other things if that becomes a reality in the future. And I think also it depends on at what stage you're comfortable investing. As founders, I would say don't be scared that the US government is going to come in and shut you down. There's already regulatory framework. Get good securities counsel. Talk to them, find out what you need to do to comply with the laws in the United States to raise money. It doesn't matter, from my understanding, I'm not an attorney, but it doesn't matter if you're raising through an ICO or private equity. You still have the same compliance frameworks, so use what's already working in the United States and what they're going to hold you accountable to, and you should be fine.
excellent. Okay. Well, yeah, we're way over time, but nonetheless, I want to make sure. I know this is an interesting panel or a topic for a lot of people. Are there any? Happy to take a couple questions if there's any quick questions. Nope. We'll go there and then there. Nope. You, sir, first.
So I think someone mentioned that it's getting a little complex, and some of you kind of boiled it down to a little bit simpler level. But my question has more to do with get simple for us. Just if you were to go to Reggie, what would you say to Reggie? And Reggie, what would you say to him? So in other words, I got this product. Here's my great product. Reggie, you're interested in it. Then what happened?
That's easy. The first 3 sentences to me would be what?
CrayPay's building the first cryptocurrency that can be used at 50,000 plus retailer locations.
Okay, so from my perspective as an investor, if I'm a pure investor, and I'm being honest, I don't really care what CrayPay is, what they do. I'm a financial investor. I'm looking for risk-adjusted return on my investment. That's how you catch my attention. You're giving me a strong, real number and a reason to justify that number. Now you have my attention for the next minute and a half. After that, then you could tell me what CrayPay is, what they do, whatever product they have, etc. A financial investor wants to make money. A strategic investor wants something else. So you identify your investor, find out what type he is, tell him what he wants to know, as long as it's honest. I think that's simple, and that's how you get the attention of 2 major types of investors, financial and strategic.
So I'd tell you 125x your money and then put a whole bunch of disclaimers after that.
Okay, so 125x knocks him out the park unless his second statement can justify that.
I missed that. You say what?
I was kind of playing with him, but I said I'd tell him 125x his money and then I'd put a whole bunch of disclaimers after it.
Okay, but that's fair. But how would you do that? You got tokens, right? So would you give him tokens as an investor? He would give you money. You would give him tokens, and that would be your kind of incentive to hold that token and potentially sell it later down the road to get your return. Is that?
I think the answer is really what he said. It's really consultative, right? So every individual investor has a different thesis, different risk tolerance, different outcome. Many of the investors we've talked to are going to look for equity and tokens. Some are just equity and some are just tokens. So you're going to have to figure out what offerings you have as a company and what they're interested in and how you can make that match between the two. Not every investor is a fit for every company.
Let me try and squeeze a quick answer in, but I think this is important, okay? Token and equity are not necessarily mutually exclusive. A token is just a piece of software, okay? If I were to design a token for a perspective, I'd say to entice an investor like me, I'd say, we have the first patents with the earliest priority dates in this business. We have 400 clients growing at a certain rate, and I'm going to give you a token with a 10% revenue share, no voting rights, and the ability to capture capital appreciation over the next 5 years. You've gotten my attention now. Why? Number one, you just don't have a ERC20 token. You have a clear path of economic value transfer from the company's success into my pocket, okay, in two different ways, income and capital appreciation. You've done your homework, you've created a real investment token, and it appears you have a real company behind it. Now, you have my attention for the next 2 or 3 minutes. Now you've backfilled what you said in with how you're gonna accomplish that, okay, and now you have a conversation.
Okay, one last quick question, and Rob, if you could kind of come head this way, we'll get into our first company intro. So, Miss.
That the investment has outpaced the technical capabilities or infrastructure in the space.
Can you speak a little higher?
Someone noted that the investment has outpaced the technical capabilities in the space, and so I'm wondering, are you seeing other companies standing up to support that demand, and is that a model that could potentially build the demand?
Yeah, so the question was, on a prior statement, I said that investment in the space has outpaced the technology, and our company's kind of responding to that type of behavior and trying to like fight against it. Does that kind of summarize what? Yeah, and I think, you know, like we've talked about a little bit, is that the companies that are doing token sales now are a lot more mature than the companies that were doing token sales last year. And I think that's a direct response and reflection from the investment community. You know, like, I don't think that companies are raising money based off a white paper anymore. You have to prove that you're capable of building and shipping product. The other side of the coin is that, you know, the white paper or the like best intentions of the team and the company are not going to be the same at the time of the token sale and a year after the token sale, because they haven't proven out their product market fit. They haven't proven out their customer base. They don't know who their partnerships are going to be. They don't even know, you know, what their customer segments look like. So people are starting to do token sales in a much more mature and kind of calculated fashion, which is good, which is what the industry needs. And we'll kind of see how that continues to evolve, but it's still a question mark.
Yeah, and another thing is that when you just look at, if you take ICO as an industry, this is probably one of the fastest growth industry in the whole history of any industry, and within a very short period of time, that now you have you know, the ICO advisory firm, you have the self-governance group, then you have also the audit provider, you have all the, you know, ecosystem players just emerge within very short period of time. Then as an investor or as a startup, you have enough tools, and you also have enough service providers who are here to just you know, work with you hand in hand. So this is, again, ICO industry, you should never just, when we talk about blockchain, we talk about distributed network, we're talking about a network. People have to connect with each other. So then you have to leverage this industry, all the expertise which are accumulated, and then now that experience have been translated into service. So leverage those services. I think that will just help you not only as a startup, or, but also as an investor.
Okay, well, I'd like to thank the investor panel. Hopefully you guys will still be around. If you have additional questions, you guys can come find them. Thank you guys again.
Thanks, guys. Thank you.